Bismillahirrahmanirrahim. Now we have a past paper question. Question name is MOSTON, and we are required for 10 marks profit and loss account, and for 5 marks changes in equity, statement of changes in equity. We will do it inshallah. As I told you, whenever there's a final account question, be careful. Read each and every line of the trial balance. Must read each and every line of the trial balance before you start the question. So we already read the question. Note number one is research and development, which IAS, IAS 30, IAS 38, non-current asset, IAS 16, then loan note, okay, no problem, then provision for current year tax, okay, IAS 12, and dividend, paid a dividend of 20, this is dividend, dividend has a mark, something like that. This we will use when we will make the statement of changes in equity. Now the thing is, first of all, as I told you, whenever we will start a final account question, we have to solve all the notes. What we have to solve? We have to solve each and every note. Got me or no?
Yeah.
Now, the first note is research and development. Research and development is here and note 1 as well. There is nothing note 1 pertain to, only 7,800. I am reading the note now. The note is suggesting MOSTON commenced a research and development project. The date is very important. My year end is June, so only 6 months, okay? It is spent 1 million per month on research until this date. Okay. My year end is what? Till when? My year end is
Third.
till June, right?
Yeah.
X, I can use 0, 1, it's up to me. I am writing 0, no problem. They started this started R&D when? On 1st of Jan 2005, right or wrong?
Yeah.
They are spending 1 million. Okay. 1 million on research till this date. Yani till 31st of March 2005. This green is the research phase. Am I right?
Mm-hmm.
Research phase, they invested 1 million. Three zeros need to be hidden. So 1 million means 1,000, right? They
Mm-hmm.
invested 1,000 per month till March. So how many months? How many
Three.
months?
3.
3 months. So 3 months, yani 3,000 is purely research, right?
Mm-hmm.
Research phase, what we learned. Research is always a expense in profit and loss. Am I right or wrong?
Yeah.
So we found one answer for the profit and loss, that research is going to be part of expense. Continuing, the project passed into the development stage. Yani after this, this yellow now, this green highlight is known as, which phase is this? That is the development phase. Am I right?
Yeah.
Okay, that is our development phase. For this, they did spend 1.6 million per month until June, at which the development was complete. But
Mm-hmm.
here is a very important line. But it was not until May 1st, then the directors were confident that the new product will be commercial success. Development phase. I told you one thing. Development phase do have conditions to satisfy, remember?
Yeah.
If conditions satisfied, it's capitalized. And if condition is not are not satisfied, is going to be expense out. The conditions are the conditions are
It um needs to be profitable.
needs to be profitable, the feasibility, the money, the resources, all company do have. Look, the directors are assuming that this is profitable when?
1st of May.
1st of May. It means that the total development phase is April, May, June, 3 months, right? But not all the 3 months, not all the 3 months directors were confident. Directors
Mhm.
got confidence in this project on which date?
1st of May.
May and June. How many months?
2.
2 months is going to be capitalized. So out of three, 2 months will be capitalized. So 1 month is going to be
Expense out.
per month amount is 1.6 million, right? So for 2 months is going to be,
Well, 3,200.
and we know that it's going to be amortized as well. Why? Because development is going to be amortized, right or wrong?
Mm-hmm.
How much or how to do the amortization? We need to have the life, right? Life of the asset. Is the life is given? Is the life of the asset is given or no?
No.
If the life is not given, we are not be able to find out the amortization. Otherwise, we will definitely find out, definitely calculate the amortization. So here we know that this 1600 and this 3000 are going to be expense out, and
Mm-hmm.
this 3200 need to be capitalized in SFP as a known current asset. SFP is not required. SFP is not required. So I'm not caring about this 3200 anymore. I do care with the yellow highlights. Why? Because for 10 marks in this question, they ask us the income statement. Got me or no?
Yeah.
Now, any problem in note 1?
No.
Note number 2, read it again, please. Very important.
Non-current assets. Mostyn's property is carried at fair value.
Hmm. And he is doing revaluation. Property, where are you property? Here is the property. Here is the plant, right? Two items.
Yeah.
And the plant has the accumulated depreciation as well. Correct?
Mm-hmm.
Now, two items now. So we will do separate. Note 2. Note 2, I am using another color. First of all, I will handle the property. Then I will handle the second thing. Meyerson property is carried out at fair value and market value. At June 2005, it was 29 million. June 2005, right? Before it was how much?
28,500.
Okay. Now it is how much? 20?
29 million.
Okay. Now the life is, beginning of the year, the life was 14 years, right?
Yeah.
Okay, then merchant does not make any annual transfer to retain earning in respect of revaluation. Ignore the deferred tax. Yani this guy is a very nice guy. He is not doing transfer to retain earning. You remember the excess depreciation need to be transferred to the retain earning. This guy
Mm-hmm.
is not doing that. Nice guy. Very nice guy. I like him. Okay. So how to do it? What to do? What to do? This property is revalued, correct?
Yeah.
So we have to find out the depreciation for the year or no.
Yeah.
What is the value? The
15 years.
value at year end is how much? The revaluation occurs at year end, na? So if I write like this for you, we have 1st July 2004, the value is 28,500, correct?
Yeah.
We have to find out the depreciation first, 28,500. Life is how many years? 15. So what is the per year depreciation? 1900.
Yeah.
And the carrying amount at year end, which is 30th June 2005, how much?
26,600.
This is going to be in profit and loss as a expense, right? 1900.
Mm-hmm.
How much you said? Sorry, 20.
26,600.
And the market value became how much? Market value is
29 million.
29 million, any 29,000, three zeros are hidden. So this 29 is the SFP, right? SFP,
Mm-hmm.
non-current asset, will be reported at 29. But the difference of carrying amount and the market value, as this company is using the fair value and revaluation model, is going to be the revaluation what? Surplus? How much?
Yeah. Mm. 2,400.
And we know this is going to be part of OCI, right or wrong?
Yeah.
OCI and equity. If we required SFP, in the revaluation is going to be added, and in the OCI, in income statement, after getting the profit after tax, we will take this 2,400 in OCI, right or wrong?
Mm-hmm.
And the plant, very easy. They said 15% reducing balance. So just what we need, we are making the income statement here now. So for the plant, I will compute just the depreciation. What is the value of the plant? Is it this much? And that is the accumulated. So 27,100 minus 9,100. The percentage of depreciation is how much? 15%. So the depreciation expense, which is going to be in profit and loss, how much?
$2,700.
Okay. This adds one line here. All the depreciation need to be charged to cost of sale, right?
Mm-hmm.
So this, all the depreciation we computed will be part of cost of sale. Okay. And about the research and development, they also mentioned that is also going to be part of cost of sale. Until now, whatever expenses we highlighted are going to be part of cost of sale because the examiner suggests that. Any problems?
No.
Can you read the note 3, please?
Yeah. The 5% loan note was issued on 1st July 2014 at its nominal value of 20 million, incurring direct issue costs of 500,000, which have been charged to administrative expenses.
Hmm?
The loan note will be redeemed after 3 years at a premium, which gives the loan note an effective finance cost of 8% per annum. Annual interest was paid on 30th June 2015.
Loan note will attract the finance cost, right?
Yeah.
The loan note amount is how much? 20 million?
20 million. Yeah.
Always remember, if there is a issue cost is a expense, right? Issue
Mm-hmm.
cost has nothing to do with the loan. Any issue cost, you will not, you will not take it. You will not take it here. If there is any issue cost, you have to remove the issue cost in order to compute the interest. You cannot charge interest on issue cost. Issue cost you must deduct. You must deduct from your loan. Issue cost is not an expense. Not an expense. It's a reduction in the loan note. What I am saying, issue cost is going to be deducted from loan note. Yani it's a reduction of your liability is going to be deducted from your loan note. Is a reducer of your liability. It is not an expense. What they did is wrong. They charge it as an admin expense is wrong. Wrong. Galat has a galat. Not allowed at all. So we need to remove it from the loan to find out the interest charge, which is going to be profit and loss expense. And what they did a mistake. They did a mistake. They charged it as admin expense, right? Which
Yeah.
is wrong. So what we need to do? So increase admin expense by 500, and this is, you can say, correction of error. Okay, so in this question we have admin expense which is going to be increased because of the correction, and the finance cost we calculated how much? 19.
1,560.
Okay, so this note is bit tricky. Any
Mm.
problem?
No.
Okay, next note. A provision for the current year tax is required. An increase in the deferred tax thing. Okay, fine. In this question, they mention already that there is no deferred tax consequences because of revaluation. We are aware of that revaluation is affecting the deferred tax, but in this question, they already mentioned here, ignore the deferred tax on the revaluation, so we will ignore. We will do very simple thing. Simple. Like we know the format now. Current year. Current year tax. We need to take the estimate for the year, remember? Estimate for the year. And we are adjusting the over or under. And we have the tax expense, correct?
Yeah.
This one, estimate for the year, is a current liability. But current liability in SFP, which is not required. And this one is the income, profit and loss expense, right? Which we need. Now,
Yeah.
estimate is how much? Estimate is how much? 1,200?
Mm-hmm.
Any current year tax is given in the trial balance on the credit or a debit side under over? Any current year tax? Any taxation drama?
No.
No, okay. So there is no over or under. So what is the estimate is going to be the expense for the year, right?
Mm-hmm.
Now, deferred tax, PD of DTL, CD of DTL. Look, CD they said increase to the 800, right? How much is the
Yeah.
PD? How much is the PD? Sir, in this question, there is nothing called deferred tax on the trial balance. And we don't have any balance available. No revenue is there, cost of sale, tuck, 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 tuck. No deferred tax. And there is no opening balance. So, is it increase or decrease? Sir, it's a increase. It's a increase. Increase in deferred tax liability is a profit and loss expense. Am I right or wrong?
Mm-hmm.
Any problems?
No.
Easy?
This part, yeah.
Okay. Very nice. Now the last point is about dividend. Please note down, dividend is not a part of profit and loss statement. Dividend is not a part of profit and loss statement. Dividend is part of the statement of changes in equity. SUI. Statement of changes in equity is dividend. Okay, dividend is a statement of changes in equity. So I am not going to consider dividend while I am making the profit and loss statement. Got me or no?
Yeah.
Now I need the data here so I can make the income statement as almost we sold all the notes. Now,
Mm-hmm.
profit and loss format starts with the revenue. How much?
113,500.
And cost of sale, we are aware of, we have to do a working of cost of sale. We have to do it a separate working. We must do a separate working for cost of sale. So if I have a space here, I can do the working here for the cost of sale. Okay.
Mm-hmm.
Cost of sale. How much is the cost of sale given in the question? Check.
88,500.
88,500 is the draft, no? Draft
Yeah.
means in the question. Now, they said, note number one, if you have any expense thing, you must charge to the cost of sale. How much is the research? Research is the expense.
Yeah.
This one is the expense.
Mm-hmm.
So 3,000 and 1,600. Am I okay with the note one numbers?
Yeah.
So note one, research and development, the reference of working. How much?
2,600.
4,600. In the depreciation note, they said that all the depreciation need to be charged to cost of sale. So
Mm-hmm.
this one is the depreciation, 1,900, then 2,700, 2, right?
Mm-hmm. Yeah.
Total is how much? Total is how much?
4,600.
And it's going to be cost of sale, right?
Yeah.
4,000 how much?
600.
Same amount?
Yeah.
Very strange. Note to depreciation. There is nothing else they mentioned to charge here. So the answer is cost of sale is how much?
97,700.
And the gross profit
15,800.
as per the format, admin cost will come first or
Mm-hmm.
distribution is first. We will better write the distribution cost first and then the admin expenses. Okay. Distribution cost, how much?
2,800.
2,800 and there is no note, nothing.
No.
So we will take it like this. Admin, they mention note number 3, right? So it
Yeah.
is 6,800 and note 3. Note 3 is the interest loan. What was the error? By mistake, they deducted 500 from where?
Admin expense.
They deducted it. What they did? Read the line. Which have been charged. What does this mean? Yani
Mm,
they already put it in admin, right?
yeah,
They increase the admin expenses. Now the correction is going to be
500 less.
500 less. Very nice. This is the direct cost of loan, right?
Mm-hmm.
Which will need to be deducted from the loan itself, not from the admin. It's not an admin expense, it's a reduction in the liability. So how much is the amount now for the admin expense?
6,300.
After admin expense, we have something called the format investment income. If there is any investment income, we will take it. How much?
300.
Okay. If there is an investment income, we will take it. And after that, the finance cost, which we already solved it above. How much was the finance cost? 15.
1560.
Then we will have profit before tax. How much?
5,440.
After that, we will have the taxation, which we had the working 1200 for the current year and 800 for this one. Altogether is how much?
2,000.
So profit for the year is how much?
3,440.
After that, we know that there is a heading of OCI. Full name you will write other comprehensive income, and here it
Mm-hmm.
will come the surplus. Surplus from where? Or you can write like this: gain on revaluation. Okay, how much it was? We already computed it. Where it is? Where are you? How much?
2,400.
So gain means added, and the answer is going to be the total comprehensive income for the year. How much?
5,840.
Halas. That's the income statement of 10 marks. Any problems?
No.
Must do it on Excel, huh?
Yeah.
Now the second requirement, SUI, statement of changes in equity. A statement of changes in equity do have many columns. The first column is share capital. Second column is share premium, which name is replaced now with OCE. Okay, yani previously it used to be the share premium. Sometimes in the paper is coming with the name of share premium. Sometimes it's OCE. Whatever it's going to be, you will take it. Okay. Then
Mm-hmm.
revaluation. Okay. Now share capital,
Mm-hmm.
premium, which is OCE, revaluation, retain earning, other reserves, and the total. That is the format of SWIFT. Okay. The format suggests we will take the BD first. What we will take?
BD.
BD. BD is the opening balance, right?
Mm-hmm.
If there is any prior year adjustment, which is IAS 8, remember IAS 8 has some adjustment that we need to adjust from the retained earning, which is change in policy. If there is something called the prior year adjustment need to be adjusted from here, okay? That's the format I am making. Total column will be there. And there is going to be a subtotal first, okay?
Yeah.
Then if a company issues shares issue, or you can say right issue. In the case of shares issue or right issue, share capital and premium are going to increase. Bas, halas. If the company issued bonus shares, share capital will increase, but premium and retained earnings are going to decrease, right or wrong?
Yeah.
If there is a profit, which is, you can say, the total comprehensive income for the year. The total comprehensive income for the year going to be added in retained earning, and dividend paid, not proposed, dividend paid is going to be added, going to be deducted from the retained earnings. And if there is any gain or loss on revaluation, is going to be affect the revaluation column. Got my point?
Mm-hmm.
That is a very basic format of SUI. SUI, any statement of changes in equity. Sometimes there are transfers. Transfer means the examiner will say transfer to retain earnings. Transfer to
Mm-hmm.
retained earning means from other reserve you are transferring in to the retained earning, or vice versa. If vice versa means transfer from retained earning, so you will deduct from retained earning and you are going to put in the other reserve column. Got me or no?
Yeah.
That is the format of statement of changes in equity. If you don't have it, it's already in the chapter 1 of the book. It's in the study hub as well. If you don't have it, please note it down. Now I'm going to solve this statement of changes in equity for this question. What I need the balances, right? Let's see
Mm-hmm.
the question. The balances, where are you, balance? Balances, balances. Statement of changes in equity. And there is one note, huh? One note I told you that this note is the dividends note, which we need to solve here now. I took the question here and the last note, which is about the dividend note. Let me put it down so we can easily read it and solve it. Mhm. So here it is. Now, all the data for SUI is in front of us. Let's see. Share capitals are given. How much? Equity shares. How much?
30,000.
30,000. Okay. This 30,000 is which date? Is which date? Is dated what? Look, they give you the date on the trial balance, which is
Yeah. 30th June 2015.
okay. This data is 30th June 2005, which I can say that this 30,000 is the BD balance or is the CD balance?
CD.
So 30,000 is here. Oof,
Mm-hmm.
what is this? Drama they are playing with us. Other component of equity, how much?
9,300.
Again the CD, right?
Yeah.
But what about the retained earning and the revaluation? See the date?
30. After. Mhm.
This is beginning of the year or no? BD or no?
Yeah.
BD is where? Yeah.
Mm.
BD. Where are you, Mr. BD? BD. Revaluation BD was 3,000 and retained earning was 6,200, right?
Yeah.
Okay. There are no prior year adjustment in this question. So, halas, no problem. Okay. Now, I need to read the note. Can you read the note for me? Read it. Note 5.
MOSTON paid a dividend of 20 cents per share on 20th March 2015, which
Which
was followed the day after by an issue of 10 million equity shares at their full market value of $1.70. The share premium on the issue was recorded in other components of equity.
Now they issued the shares, na? Shares issue. How
Mhm.
many shares they issued? 10 million, yani 10,000 at a price of 1.7. So how much company made? How much money company made? 17 million, right?
Yeah. Yeah.
We knows that whatever you get the money, the par value is going to be part of your share capital and the remaining is going to be part of share premium, right?
Mhm.
So that par value in this question is $1. So $1 into 10,000, the 10,000 will be part of the capital and the remaining 7,000 is part of premium, right or wrong?
Yeah.
So we don't have any right issue, no bonus issue, nothing, but we do have something called share issue, which is getting an effect of 10,000 here and 7,000 here, right?
Mhm.
So can I have my opening balance of share capital or no? Closing is 30. During the year 10,000 got issued. So the opening balance is 20 or no?
Yeah.
And 9,300 is down. Above is 7,000. So, be-
2,300.
and the total column I can make now.
Mhm.
This is 17,000, right?
Yeah.
OC, other comprehensive income, how much we got? 58,
Yeah. 5840.
going to be added here. And only revaluation gain was there. How much was the gain on revaluation? Check. 2,400, correct? Hello?
Yeah. Yeah.
Now be careful, huh? 5840, 2,400 is the revaluation, and
Mhm.
3,440 is the profit, correct?
Yeah.
This total comprehensive income is going to be distributed amongst the revaluation and the retained earning. That is the total. 5840. The profit for the year is going to be part of retained earnings, and this is going to be part of the revaluation reserve. Got me or no?
Mhm.
Any questions? Any questions?
No. No.
Now I need to find out the dividend only, which is this note. Dividend 20 cents. So 20 cents will apply on which number? Which number of shares? So dividend is 20 cents per share. How much you had the shares? How many shares you have when they issued the dividend? 20 million or
Yeah.
30? So
20 million.
how you comes to know that? That's sir, dividend is before than the shares issue. Read the question carefully. The dividend paid one day was dividend issued, then we have the share capital got thing, right? Which was followed the day after by an issue, right? Yani they issued the capital and then they provide the dividend to the shareholders, right?
Mhm.
The new shareholders are entitled for the dividend or no? Dividend is given on the year end balances, right? The
Yeah.
the shareholders at the end of the year. This dividend pertains to current year or the previous year? This dividend is paid in between this year. So this dividend definitely pertains with the previous year, right or wrong?
Mm-hmm.
The previous year closing shareholding, which is the opening shareholding of my current year, are entitled for that dividend only, not the new shareholders. Okay.
Mm-hmm.
The new shareholders can never be entitled for any dividend announced during the year. Only the previous year end, which is going to be the opening share capital, are entitled for what? For the dividend announced by the company during the year. Okay.
Mm-hmm.
And that is called the equity statement, or and with this, we just completed the question called MOSTON. Okay.
Mm-hmm.
Any problems?
No.
Okay, that's it for this one.